Welcome to the Property Funder podcast. My name is Michael Dean. I'm your host. You can find me on the internet at property_funder. That's why the podcast is so named. We're here today with Sam. And before we talk to Sam, just want to have a quick bit of housekeeping. First of all, I want to thank AP Capital, the show's sponsor. AP Capital is a development bridging lender lending in England and Wales. We're actually at AVMOR's offices today here in Cannon Street. AVMOR lend on projects from £250,000 all the way up to £25 million on bridging, development, refurbishments, and AVMOR specialist product, Part Complete Development Finance. If you are a returning viewer or listener to the podcast, thank you as always for your support. If you want to show some even greater support for the show so we can speak to more interesting and inspiring entrepreneurs and business leaders like Sam, who we've got here today, can I please ask you to like, subscribe, and give us a 5-star review? Now, Sam, thank you for your patience. Great to see you here today. Could you please introduce yourself and the name of your business and what it does?
Yep. Well, first of all, thank you very much for having me. Really looking forward to having a good chat. I'm the co-founder of Try7. We are value-add asset management and investment firm. We specialise in buying really messy assets where we can see some medium to long-term potential to reposition assets, to really get into nitty-gritty part of an asset where we can see value, be it reposition to a PBSA scheme or a co-living scheme, or make a redundant office building a really good office building where we can see potential where it can be used for years and years and years. We focus mainly on the regions, major cities, Birmingham, Nottingham, Liverpool, Manchester, Bristol, to name a few. We've done 2 deals in London. Find it really hard to compete there with foreign money coming in. But that's kind of what we do and how we set up. Yeah,
but your starting point in the property industry, you didn't start out in property to begin with. You sort of finished uni about 15 years ago, something like that, and I
didn't quite finish uni.
You didn't? Oh, okay. Oh,
I can't say I've got a degree.
Why didn't you finish uni?
So I finished school 2009, good A levels. Always wanted to go into the city. Didn't really have any interest in property whatsoever. To get into the city, everyone told me you need to go and get a degree. So I thought, means to an end. I'll try and enjoy university, get a degree, and move on. But I never really liked doing exams. I never really liked education. I went to school to have fun and play sport. That was about it. And the grades were there to get me on to the next step of my career. About 3 months into I went to study economics at Birmingham. Absolutely hated it. And 3 months in, I was like, I don't want to go to any lectures. I'm having great fun, but I don't want to be here anymore. Speaking to my parents, they said, just go through it. It's a means to an end, try and got to the end of year one. And I said, I'm going to try and get an internship in the summer, see what I can do. I got an internship at an oil brokerage and trading firm, actually around the corner from LBI. Did 6 weeks there, absolutely loved it. I was on the front desk, loved the hustle and bustle, screaming over the desk. It was amazing. It was all I always wanted to do that. Funny enough, one of the middle office guys left when I was there, and they said, "Do you fancy having a full-time job?" So didn't say anything at the time, took it away, thought about it, and I was like, yeah, let's go. So left uni, started there in the September. This was 2010, I think, 2011. I remember off the top of my head. And I was there, I was in the city, the hustle and bustle, had a job. Amazing. Within 3 months, I was trading on my own, trading for clients, absolutely loving it. Thought I'd smash life, dreams come true. Getting in the office at 6 o'clock in the morning to open the Singapore market, to see the close of the Singapore market, not leaving till 8 o'clock to see the opening of the New York market. 3 months passed, and I was hating it. Another 3 months passed, and I remember sitting at my desk and I was looking around the office at these 40-year-old guys who were earning really good money, which was one of my main drivers, but they looked tired and run down. And I was sitting there thinking, I'm 19, 20, I don't want to be there in 20 years' time. Crap, what do I do? I've got no degree. I've left after a year. I was like, I don't know what I'm going to do. So I tried to kind of see if it got better for another 3 months. And eventually I was like, I can't do this anymore. So handed him a notice. Sorry, I'm leaving. In the background, I was thinking, what else can I do? Do I go back to uni? Do I start again? Do I try something else? I back myself. I've always backed myself to be able to kind of make a path for myself and be successful in whatever I want to do. And I kind of made the decision that, okay, I'm going to part wanting to be a city trader and maybe get into real estate, or what I call it, property. And I was thinking, how can I get into it? And I was sitting down with now my wife, but was my girlfriend's father at the time, was in property, and I was saying, what do I do? He goes, well, you're going to have to go be an estate agent. Learn from the ground up, be an estate agent, become a manager of the office, then maybe go to a commercial agency and see where you go. With a view that I don't know why in my head I always wanted to be a developer. I went and met loads of different people, and there was one guy who I got introduced to called Mark Smith, who was a serial entrepreneur and residential property trader, a company called London District. And I sat down with him basically for advice and could he introduce me into any agents. And he said, I'm not going to give you a job. There's no way I'm giving you a job. I've got no property experience, nothing. But let's have a chat and I'll introduce you to some people. I was like, great. Anyway, after talking to him for an hour and a half, he said, there's something about you. I really like you. I'm going to give you a chance. And that chance is, here's a deal we're just about to buy. You've got 24 hours to dissect the deal, do analysis on it, and let me know what I think you should do. And I was like, great. So I took it away. I knew nothing. Absolutely nothing. So he gave me the address. The address was 2 Milton Close in Highgate. So I did a bit of Googling on it. I could see it was on the market a year ago. So what do I do now? There was a block of, there was a house, I think it was split into 4 flats. Anyway, called up 3 agents, got them all to value it, and put this little appraisal on a Excel spreadsheet, very basic. And I sent to him saying, here, this is what I think you should do. Called me back about half an hour later till he got a job.
Wow.
And that's how I got into it.
Wow.
Yeah. I was there for 7 years and so a very small company, but they did a lot of volume. We were probably buying and selling something once a week. So loads and loads and loads of volume, all different sorts of transactions. I saw we were buying shop and uppers, arrays of shops, portfolios of resi flats to break up, lots of short lease flats, all sorts of things. But the amazing thing that he did for me was I was sat in between the 2 bosses' office and I could hear everything, every conversation. I could ask any question I wanted. And it was just an incredible place to learn.
We do talk about on the podcast the importance of being in an office, particularly when you're young. So, we sort of go full boomer when we sort of evangelise the importance of being in an office. But to your mind, if you had taken that job on at the beginning of COVID, do you think you'd have been able to make as much of a success of it?
Not a chance. So when COVID came and I was thinking about my experience then, I felt so sorry for the grads or people who just started, because my personal view is you need to be in an environment where you can learn from people who are better and more experienced than you. And you can't do that at home. It's impossible. I don't care what people say, they have team breakout rooms and whatever online. Nothing to me replicates that experience of being in an office, listening. And we found it. So we've now got we kind of were semi in the office, not in the office, and now we're all full-time back in the office. The amount of ideas we just come up with, just talking crap really, amongst colleagues, has actually led to us buying 2 of our assets, just from kind of brainstorming, being in that environment, overhearing conversations from someone else. So I kind of feel sorry for those guys who don't understand what it's like being in the office and the importance of being there, but I think it's key.
So you did 7 years with Mark. Why did you leave and what did you do after that?
So I just got married. This is Feb 2017. And I was thinking, I've got a lot more to learn from Mark, but I think I've learned enough. And I think for me to move on in my career, I think I need to make some mistakes on my own. So had no kids, very limited overheads. For me, it was the perfect time to say, you know what, I'm going to go and do it by myself. Set up and see how I get on. Had no funding sorted out, nothing, but I knew what I could do was source good assets, good deals, basically. So I think I left there in April 17, set up, which is now Try7 in May 2017. And I was doing what I was doing previously, so buying short lease flats, a lot of regulated tenant properties, all sorts of messy kind of small resi deals.
Yeah.
So yeah.
And so then let's talk about the evolution of Try7. So you're brave enough to go out on your own. Obviously, you're kind of doing a bit of a rinse and repeat of what you were doing with Mark. Yeah. How did Try7 evolve into a private equity backed developer with the best part of a dozen regional assets under its belt? So it's not exactly a flat in Highgate.
No, so looking back at it now, where I look back, I can't quite believe it, where we are now and hopefully where we're going in the future. But so I was busy buying, as I said, messy, smaller deals. And then early to mid 2018, a friend of my brother's had just left where he was working at family office, and he was doing a lot of permitted development deals, so office to resi. And he said to me, do you fancy doing some of these? And I said, not really. I don't really. It's not something I get involved in. I don't know it. I like to stick to what I know and grow that. He goes, okay, fair enough. But I said, listen, if you find something and you can't find the equity for it, come to me. Not that I had equity, but I just wanted to see the opportunity. And we ended up doing 4 deals in about 4 months together. He'd buy them to me, we'd do permitted development, and we'd trade them. So I was like, wow, this is something that we could really do. So we formed a business. He came into my business and we went equal partners. And that's kind of how I got into the commercial side, even though it was more with a resi angle. Then we were sitting there thinking, all these amazing office buildings have been converted to PD, to resi. What's going to happen to the office market? Surely there's still going to be a demand. So we kind of went completely against what we were doing. And we were like, let's go buy some good located regional office buildings. So we did that, had a lot of success trading, buying and selling, held a few in the asset. And so we were trading them and we thought, hold up, we're trading stuff for half, we're making good money, but we want to try and build a portfolio where maybe we'll have value at the end to sell together or just for the income. So we sat there and thought, let's buy, but we've actually got no equity on sales. How are we going to do it? So we went and raised what I call from family and friends. So high net worth individuals. So if we were buying a building for for 5 million quid, we would go and raise from 10 different investors, $500,000 each. And we did that all the way up to COVID. It turns out I think we probably 7 or 8 assets. And I think we've got 2 of those still. That was all the way up to COVID. So we had a really busy 2 years and we were flying. It was really good. COVID came. And all these high net worths who were investing in the business said, we're not doing anything. We're in the wealth preservation game. We're not risking anything. We don't know what's happening in the world. Can't really argue. And we're like, right, what are we going to do? We're seeing these opportunities. We need to buy to live and buy because we see opportunity, really. What we're going to do. So we sat down as a team, we brainstormed, and we said our 5-year play was always to go and try and raise from one pot capital, which makes it a lot easier than having to go and convince 10 individuals to put $500,000 quid into it. So COVID came and we were just like, let's just try doing it now. What's the worst that can happen? They say no and we're in no worse place. So we put this whole shiny deck together. We had a capital raiser come in to help us with the shiny deck together. And it looked really impressive. And the first question the capital raiser said to us, how much do you want to raise? And we said 20 million. He goes, That's absolute crap. You're not right. I'm not going out asking for 20 million. We're going for 100 million. We looked at each other like, this guy's absolutely crazy. Anyway, we went out. We probably interviewed with hundreds of different, about 100 different people, high net worths around the world, pension funds, all sorts of people. And we ended up getting 5 offers of 100 million. And we ended up going with our partners now, who are our company special opportunity partners, who today have kind of been our sole back.
Talk us through what that experience was like of having, of doing these roadshows. I mean, I guess you weren't really doing roadshows at the time because it was COVID time, so it's all on Zoom. I mean, was that an advantage or disadvantage? Because obviously you can't, you don't have the ability to develop that sort of in-person rapport with people.
So I think I think because it was COVID, we were able to get in front of people who may not have given us time before.
Yeah.
They're at home, not much to do. I think that was a positive. Obviously, you want to go meet someone and shake their hand and look into their eyes and say, this is us. I think you get a much better feel. But I think people gave us more time because it was COVID and there wasn't that much going on and they were sitting at home. So I think that's probably a positive. I think the words are my favourite.
And, but if I cast my mind back to that time, it wasn't just the high net worths who were kind of adopting a risk-off approach. I mean, Avamore was like most of the other specialist lenders. The funding lines are basically, 23rd of March or whatever. They basically said, stop lending, stop funding. We'll tell you when you can start doing deals again.
Yeah, so we went out raising. It was December 20.
Yeah.
So the
things have come back to life.
People have realised the world's not actually ending. And people are actually back doing stuff. Housing market was going mad. So I think people have kind of accepted that the world wasn't coming to an end. Yeah.
Okay. So it was actually not such a bad time.
Yeah.
When if you think about the timings, you started you set up shop on your own in 2017. You had your partner come and join you in 2018, and you did a handful of deals. How did you sort of have to pinch yourself when you think, God, in the space of 3 and a bit years, you've gone from trading shops and uppers to effectively having a £100 million equity pot to go out and hunt with?
Yes. I remember sitting there when we were setting up our JV with Alchemy, thinking, I can't quite believe what we managed to achieve. It was quite surreal.
Yeah.
And we hadn't spent any of it yet, and we hadn't done any deals with it yet, but it was surreal that someone kind of had backed us. It was a great feeling.
Yeah.
Surreal, and it still is. I'm still kind of thinking around the corner, depressed, 19, and what we've achieved.
Yeah, but, you sort of. But I mean, how do they approach it though? Because how do they approach it in terms of your own equity contribution? You could talk about it as a JV, but is it a sort of JV in the sense that they put the money in, you put the sweat in, or are you having to put some of your own cash in as well?
So they put the majority of the equity in. The partners that try 7 and 5%.
Yeah.
Up to a certain amount, and then once we pass that, it's a conversation.
It's a conversation. Yeah.
So that was the important bit that we could put in, even though it's small amounts to them. It showed we believed in the deals.
Yeah. Yeah, I mean that's the I think that's quite an interesting thing because people sort of have to contemplate that. There's loads of people who trade in property at kind of that sort of 1 unit, 2 unit levels where they're raising money from high net worth individuals. But I think as your experience goes to show, and you were raising 500,000 tickets from people. And that's actually probably not that's not that common for a lot of these sort of property traders, what I call the sort of Instagram traders. They spend half their lives on Instagram.
I love their videos.
Yeah.
They do make me
laugh. They spend most of their lives on Instagram trying to raise money from their next high net worth. But it's sort of like this sort of never ending hamster wheel, but you can never really grow and develop beyond the sort of the little wheelhouse that you sit within. Because you're constantly having to raise 100k here, 200k there.
It's hard.
It's really hard. when you were saying that, oh yeah, we got £500,000 from 10 different investors, I can relate to that, because in the early days of Avamore, we started by lending my family money and Zaher's family money, but that can only take you so far, right? You don't have endless pockets, and so then you start to club together with other high net worths. I'm sure we have probably some mutual acquaintances that we no doubt we've tapped into the same sources of capital. But even that gets to the point where that doesn't work. We did like a £5 million development loan with like 6 names.
And it's time consuming.
6 names on the docs. It's time consuming, but also I feel like you can't ever really originate deals, and this is whether you're a lender or whether you're a developer. I feel like you can't really originate deals with any degree of confidence, because you're always thinking in the back of your mind. You always sort of pull back a little bit, because you're always thinking, in the back of your mind, I need to sell this to the investor, or and you're always you're always sort of originating to the lowest common denominator as well in that situation, which is that the most you're trying to find a deal to work for the most difficult of your investors, because that if they're going to take it, then all the less risk averse ones are going to take it as well. But for the larger deal, you need everyone in the game, and so I imagine to go from not having to worry about that to basically just the money is essentially one phone call away, is a great place to be.
I wish it was easier. I wish it was as easy as one phone call, but
of course,
it's nice just to have it there and it's one shop.
And how does it work? How does the funding arrangement work? Do you have a set of criteria that you work towards?
So how we kind of look at it, and at the moment, maybe this is for later in the podcast, but how our business, we want it to grow, is to become almost a fund manager with different pots of capital, doing different strategies.
Mm-hmm.
The Alchemy strategy is very clear. It's buying undervalued, underloved assets in prime cities to repurpose into something better. Every deal so far has been a bed-led strategy. And if it takes X, Y, and Z, we do it without.
Yeah.
And it's really took a bit of time to kind of get used to each other. But, we're now 3 years into deployment, and, we know each other really well and what we need to do.
But presumably, when some deals have come along and they've fallen outside of the parameters have fallen outside of what you've mutually agreed is fits within the box, what does that conversation look like? Is it a computer says no approach, or do you go, listen, we think this is a good deal, and it doesn't fit our strategy?
I'm not going to go so much into Alchemy as a business, because it's their business, but they've got very set parameters on what we can do with them,
mm-hmm.
and anything that doesn't fit into the Alchemy box, we're free to do with what we want. And we've done a couple of deals where we bought it ourselves without any other backing, and also looking at potential new strategies with new funders, nothing to do with kind of what we're doing with Alchemy.
And at a business level, you've gone from effectively a trading strategy, which is presumably throwing off cash flow pretty regularly, to a different model where you're taking larger, more long-term, medium to long-term development sites, which unfortunately don't throw off cash as quickly or as readily. How do you keep the lights on in that situation?
So for the first 3 years, we were driven by, we weren't earning a lot, but you've got to take a risk and you've got to cut your cloth accordingly. We were lucky we did a couple of trading deals that kind of brought in some cash for us to live on, basically. But we were kind of living off management fees and asset management fees until the first deal was exited, which is hopefully going to be in the next 3-4 months. So, and we've got that pipeline now where we don't need to really worry about that going forward. But it was tough to keep the business going.
Well, I think that's a very interesting point to highlight to people. So you start in 2017, and you've basically been living off, I wouldn't call it scraps, but it's not been, it's not exactly, you're not exactly living up to the stereotype of the cigar chomping, property developer baron, you've had to wait the best part of 7 years. Here we are in 2024. You started 2017, and only now you're about to have your first exit.
Yeah.
First
of the
proper alchemy exit.
I'd say, we did okay. I think from 2017 to 2004 we set up the alchemy, probably earning more.
Yeah.
But when we raised the money, there was a lot longer term view.
Yeah.
We're going to have to cut back, but hopefully long term will be a lot more beneficial.
And so, how many people are you in total now at Try7?
So a great lesson I learned from Mark, my first boss, was keep it as lean as possible. So he had a big development business in the early 90s and got stung. And he would always drill into me, try and keep your overheads as low as possible. Because if, something does happen and you've got a machine which has 100 staff, it's a huge issue. Whereas if you've got everything outsourced with people you kind of know very well, it's a lot easier to cut back. So Try7 is super lean. So we brought in another partner in 2022, Daniel Green, whose background was more fund side. And we brought him in to basically we were traders, and he had been on the other side of the fence and kind of understood the modelling and the reporting and the financial side of it. So he came in and been a great asset. So he came in. So Dan's a partner, myself, we've got a head of asset management, we've got an FD, and that's about it. And then everything else is kind of outsourced to trusted advisors, our architects, our planners, everything else we kind of need.
Yeah. And in terms of headcount growth, presumably then you're not looking to massively grow the headcount unless you've got a huge increase in assets under management.
So I think as we grow and our strategies hopefully grow and we become more of a fund manager, we will probably need to employ more people. But I think I prefer to employ more senior people first and teams grow underneath them. But we're not there yet. Hopefully we'll be soon.
So, if we think about, you go to, the end of 2020, you've got this pot of capital, the JV with Alchemy you set up. Effectively 100 million burning a hole in your pocket, so to speak. I mean, that's 100 million of equity. Presumably you've also, you can gear that up however many times, 2 or 3 times.
Maybe not now.
How did you maintain how do you maintain that sort of approach where you weren't just, doing deals for the sake of it, feeling that, buying a load of crap?
Two things. Alchemy are very good partners and they're super bright guys, and they, won't do average deals just for the sake of it. So that's one, they're very tight on that. So that's good. And secondly, because we're putting in hurt money, we don't want to throw away money. So that's kind of why it's so important. And that's why investors want you to, co-invest with them, because your 5% is probably means a lot more to you than the 95% from their fund to they don't even know where it's from. Really. Yeah. So that's kind of how we kept our discipline, and we still have that discipline now. We won't buy something just for the sake of AUM. It's got to work. Maybe that would change. I don't know, but we're really focused on what we buy, we believe in. So that's kind of how we kept that discipline. But with Alchemy, the first couple of deals we took to their IC were office investments. We were going to do, refurbish, re-gear, re-let office buildings, but they weren't good enough, so we didn't buy them. And then the first asset we bought with them was a shopping centre in Leeds, which we just, at the time, we didn't really know what we were going to do with it. We knew there was an alternative use. It was a 300,000 square foot shopping centre in the middle of Leeds, trading for way below reinstatement value and whatever. So that was the first one we bought.
Yeah, I mean, I guess that's one of the shopping centres have been, they've definitely become a real red-headed stepchild of the property world. And I remember, so being a little bit older than you, I remember I started in Cushman & Wakefield 20 years ago now, which only feels like yesterday in lots of ways. And I got my first seat, which was retail warehousing. Yeah. Retail warehousing sort of undergone a little bit of a sort of that was probably peak retail warehousing when I joined, but you could see it was starting to go on the wane. Yeah. It sort of
It's come back
it's kind of come back a bit now. But I was really jealous because I really wanted to be in shopping centres because I thought shopping centre investment, that's where it's at.
Yeah.
Shopping centres are sexy, they're fun. And
they've changed, they've had to change.
And that has completely turned on its head.
Yeah.
And aside from, your Westfields and things like that, the vast, when you've got shopping centres trading for £250,000 in Glasgow that would have been trading for 30 or 40 million quid not that many years before.
Yeah, well, I think
it's just mind blowing.
The core was traded. I think it was pre 2008. It was traded, I think, 110 million.
That's mad. And what did you pay for it?
40.
Wow.
So,
but it's still,
and it was traded in between that.
And still income producing.
Not anymore.
Because you're going to do PBSA with that.
Yeah. So our strategy. It's a good example of what we kind of look for. That was something that a developer couldn't buy.
Yeah.
Because I think the last tenant was leaving in 2043.
Yeah. So you can't secure vacant possession.
No, but our experience previously with doing so much office stuff, we were kind of confident with negotiating tenants. And an investor's never going to buy that because although we bought off like a 16% yield, the income's just no good. So we worked out VP over 3 years. We got consent in March for 807 PBSA beds and 40,000 square foot retail.
Wow! And the PBSA beds, are you going to build that out? Are you going to sell that to developers?
No, so we've got a JV with Fusion Students. They're also partners in Try7 as well, so that's kind of how the strategy came about. Yeah. We've got a partnership with them, and we'll develop it out with them. And not 100% sure what we're going to do after development, but it's a conversation we're having at the moment. But they'll be developed out.
Yeah, I mean, it's a funny one, isn't it? You bought something because you effectively bought something because it looked cheap. But you didn't actually have a very clear strategy as to what you were going to do with it.
Not really. Sounds mad. Not really, but then we quickly realised, one of our backers is part of Fusion as well. Like, this is a great PBSA site, and that's kind of how our PBSA kind of strategy started.
Yeah,
kind of by mistake, but it was by mistake.
You sort of fall into it.
Yeah,
you sort of fall into these things, don't you? We just bought an office business park. It's sort of 2 acres in a nice town in Surrey, and did a LinkedIn post about it yesterday. Because we've got marketing, we've got a couple of vacant units there, and trying to sort of get the marketing going on that a bit. And and it's offices. It's an obvious resi play, but we can't. Again, a bit like yourself, we can't get VP until can't guarantee VP for 2032, 2033. So you would automatically assume that resi developers would love that site.
Yeah.
But and that's one of the reasons why I bought it.
Yeah. So that's exactly kind of what we buy.
But offices. But in the meantime, actually the income's great, 14%, whatever it is we're getting. That would be the gross yield. Obviously, it's fully let. But if it's Class E now, you don't have to let it as offices.
Yeah.
The location's great. It's got really good car parking, and you think, well, I can let it as a yoga studio, or we've had interest from vets, and I think actually one of the biggest challenges is trying to change the occupational agents' mindset from, oh well, I just wait, I just pick up the phone to all the other office agents in the area and ask them who they've got requirements for. But I think that time is done.
Yeah, you've got to be creative.
You've got to be creative. And find.
And the successful agents now, they're the creative ones. They're the ones that are thinking outside the box. They're not just trying to flog a building on a 5-year lease. They're being creative. One with how it actually looks as a lease or whatever, and who your tenant is. Yeah,
but in terms of, but also tenant outreach, because I think a lot of occupiers are now going unrepresented. You can't just pick up the phone to Gerald Eve and go, well, Gerald Eve, who've you got?
Yeah.
You've got to be like, right, okay, you need to find ways of reaching the end consumer, because the end consumer isn't going to pay a 10% fee to Gerald Eve, Knight Frank, whoever, and fill in the blank. They're just gonna go on the internet and they'll and look and find it themselves.
All our office stuff, it's our website, it's our kind of marketing, it's our branding. And if an agent wants to get involved, they can. But we kind of lead that because I think we're more creative.
Yeah. I was actually, I'm quite friendly with a chap called Julian Carey, who was, he's sort of managing director of what was Industrials REIT and is now, they've recently taken over by Blackstone and go through rebrand. And I think they are very, he was saying they're very proactive when it comes to, when it comes to finding tenants, because they've got a huge portfolio of 1,000, 2,000 square foot industrial units. You can't rely on agents. You've got to find new and innovative ways to find tenants. Do you think there's an opportunity here for either a marketing led commercial agency to come out of the environment that we're in?
Sure, there is. Yeah, and I think a few of the agents are doing that. They're kind of morphing themselves into agent/marketing people. So that is definitely happening. I think a few are like disruptive, and really pissed off the big boys.
I think it's overdue, isn't it?
Yeah.
There was the old adage, no one ever got fired for hiring CBRE. And to be fair, most people who work at CBRE are amongst the best in the business in terms of professional people. But I think we're in a new world now.
100% agree.
Where do you think the PBSA market's headed?
So I think the rental growth is unsustainable. What it's been the past 2-3 years. Some cities you've had 10% per annum growth. I think that will slow down. I don't think it'll stop, but that will slow down. Otherwise, it'll be completely unaffordable.
Just for context, we had Richard Stott from Keckskill Group. He's a Avonmore client. We're doing funding a refurb of his. So they've got a £200 million portfolio, and they're very very strong in the PBSA sector. He's saying that their focus is very much on the on affordability.
Yeah.
Where for your scheme in Leeds, for example, what sort of levels of rental levels per week are you looking to target?
So the average room rate, I think, in Leeds is just north of £300 a week.
Yeah,
and it's expensive.
That feels very expensive.
But it's the product that our partners, Fusion, have is top end, probably one of three who compete in that kind of top level. And it's wealthy English students and foreign national enrollment. That's kind of who they are targeting. So,
Richard was saying he thinks that the general election, by the time we release this, will probably be released just before the general election, so in a couple of weeks' time. Richard was saying that he thinks that a Labour government will be good for the student housing market. Do you share the same thought process?
Yes, I think that it will be the one, not issue, but the one concern we could have, especially because our product is high end and we are slightly reliant on foreign students, visa requirements coming to the UK and stuff like that. But
so do you think that will be ease?
I hope so. I'm not convinced, but it's a risk. We'll see.
Yeah, there does seem to be a pretty strong trend amongst all the political parties to take some sort of tough line on immigration, and I think ultimately you end up with student visas tend to then end up as collateral damage as a consequence of that. Ironically, I'm hoping as of next week to hire a mentee of mine from University of Reading who is a non-European national, but a very capable individual, and so works very well for both of us. But I think that if he's also a qualified architect and now has gone and done a master's in real estate.
Yeah.
You look at someone like that, you think, well, if you're denying people with that level of ability and potential to come into to add value to the UK, it's no wonder we're struggling in lots of ways. That could, from an economic standpoint.
Yeah.
But I guess from your perspective, if you're denying if you're not allowing some of the wealthiest students internationally to come to the country, it's obviously going to be
That
detrimental.
will get the rates we charge, but we don't have a crystal ball. So
No.
Let's see.
No, well, exactly. But I guess the other side of it as well is that if you bought the asset at a good enough price, you can be a bit more flexible about the rate that you need to charge.
We don't go out there and say we're developers of PBSA. We are opportunity led, and we're not just making development. We buy well. So we've got enough wiggle room. We hope that we can take a hit if rents do start to fall.
Where do you see the biggest opportunity in the commercial sector, in the regional commercial sector?
So you're saying assets for us to buy?
Yeah. What would you? Yeah. What do you think? And obviously you can say this because you can't buy everything, right? So
no.
where do you think the opportunities are at the moment?
I think office buildings, well located, where ESG is such a big thing now, especially if any funds want to own an office. But it's got to be EPCA, it's got to be X, Y, and Z, and it's expensive to get an office from a EPCD to an A. So vendors are very okay. If you offer me really more than it's worth as an office, there's an opportunity to have that. So definitely the office market, still high street retail. We bought a parade in Southampton in January. Okay yield, but probably more than it's worth, but with a view to long-term redevelopment play. Yeah. So high street retail, office is kind of our mainly what we get.
Do you, it's interesting to hear you talk about high street retail. Do you sort of feel like that's finally retail's now come out the other end and it's sort of found its equilibrium? All the occupiers that could have moved online have now moved online.
Yes, I think, but I think there's still a lot of vacancies on the high street, and especially secondary positions. It's struggling still. Yeah, you go down most high streets, there's vacancies still. But it's, prime, it's come back massively. And you look at retail parks, they're trading strong now. They're back. People want to buy them. But I do think the high street is struggling still.
Yeah, retail parks are an interesting one because you've kind of got that. The really bad ones, industrial prices now are so high that you can convert. It almost makes sense to convert the retail warehouses into industrial units. And I suppose, do you think the ones that are doing well, they're enjoying a resurgence because do you think that's a post-COVID thing where people just want the convenience and the comfort of being able to drive somewhere and not having to
I think
go through a high street?
People are bored of just ordering online. Although my house is like a post office. I think people are back and ingrained and want to go out and want to shop, and obviously it's never going to be what it was pre-pandemic, but it was going that way anyway. But I think the good located retail parks are trading very well, and none have really been sold recently, but when they are, they're trading at a strong yield.
Yeah. And it's interesting. And where do you see the biggest weakness? Where would you be avoiding what would you not want to touch for the next 2-3 years?
Probably industrial.
The yields have just gone too far on industrial.
Yeah, but yes, they've fallen off. But so Daniel, who's now coming as a partner, he built a big industrial portfolio. I think we exited for 500 million. Yeah. In 2021. So, I don't think we'll touch industrial at the moment, but it's something we're keeping on. But I think the yields are too keen.
Yeah, it's one of those ones where I think it's sort of gone, it went
so mad.
It went mad, and it was sort of became a really thematic thing where, you had, and there's that herd mentality that happens within the sort of fund management world. And
which I find mad.
Yeah.
I can't get my head around it.
Well, I mean, to speak to that, this asset we just bought in Surrey, we paid just over half of what the vendor bought it for.
They're a fund.
And they're a fund.
Yeah.
But they weren't an open-ended fund where they had to sell it to fund redemptions. I think they were just doing a sort of strategic reallocation, and it was like, well, offices are the red-headed stepchild. You just need to sell it.
Yeah, so we completed last month on an office in Bristol.
Yeah.
Exactly the same thing. owned by a fund, had no place for it really.
Yeah.
Didn't want to do the refurb on it. So yeah, we bought it.
I mean, do you think fund managers, as I always say, fund managers, funds per se, big institutions, do you think that they should be owning commercial property, owning and managing it?
Yeah, because they give us opportunities to buy. So yeah, they do.
I mean, I agree with you. I mean, almost every commercial purchase that our family's made in the last 10 years, 12 years has been buying from some fund or other.
I think most funds are reducing their real estate exposure anyway. But I think real estate makes up a key kind of asset class. So I think they've got to have it. They do. They're just not very good at, I don't think, the day-to-day asset management.
I think they should be owning it indirectly, because I think the difficulty they've got is that the expertise and resource that they possess isn't sufficient. They just aren't able to. I don't think that A, they're able to manage the assets well enough, and B, as we've both benefited from, they sell assets at huge discounts, without any real business rationale or reason for it, other than someone in the CIO's office has decided to do some sort of tactical reallocation. That then, and if you've got your pension money, some of your pension money is in one of these funds. These are real Joe public that are affected by it.
What I find the funds are buying is their income.
Yeah.
And if they serve the purpose of serving the fund for income, they don't really mind. I don't. That's not how I look at it. And kind of that's how I kind of see our business as Try 7 growing. We kind of want to say fund management. We don't. We still want to be asset managers, where we get that direct pension from them and saying, listen, we are experts in X, Y, and Z. Cut out that fund and coming back up. So that's how I kind of want to grow the business.
Yeah. Obviously, your particular the strategies that you're employing at the moment, will fulfill some of those criteria, but obviously you're not a sort of income, you're not a core plus investor, so which is a lot of what these institutions want, right?
Yeah, but that I think you need a track record to be able to come and get that kind of core money.
So presumably,
we're trying to build up.
Well, I guess with the exits that you've got coming up, then that's going to start to build that track record, and you can then say your next fundraising deck can show all these lovely returns.
Yeah, so that's the plan.
That's the plan. And aside from industrial, was there anything else that you think is sort of you'd want to avoid for the foreseeable future?
Short-term resi development. When I say resi development, I'm saying build to sell.
Yeah,
I think it's if you've got a scheme of 50, 100 units, it's very hard to find 50 or 100 everyday people who can go and buy something at the moment. So, but I think that will come back, just not really short term.
Flipping that on its head, do you then not think that creates an opportunity to buy finished stock, rent it and sell it in 2-3 years time?
Yes.
If you think the discounts are there.
So yes. So what we've kind of how we've really focused our business is let's concentrate on one thing and really specialise in that one thing. So having looked, if I'm honest, that sort of, I'm sure, that is an angle, but then you've got to look at, well, if you're renting out a new build product for 3 years and you get the keys back and it's absolutely ruined and you've got to spend $100,000 refurbing it, is that your profit gone? But I get what you're saying, but as a business, we do just really focus on one kind of thing, and that's how we've kind of, I think, done really well in the past 3-4 years. Focus.
And so in terms of, let's talk about your most recent purchase in Bristol, and maybe that can be instructive for anyone out there who wants to bring you some more deals going forwards.
Yeah.
Tell us about that. What does that look like? I have a bit of a personal affinity with Bristol, having gone to university there.
Okay. So so Bristol's a great office and student market.
Yep.
Probably PBSA second only behind London, maybe Manchester, and same with the office. So it's 75,000 square foot office let to the government, who had a year and a half left on the lease. The fund who we bought it for knew there'd be a big capex piece coming forward. They didn't want to do that, So, we tracked it for about 2 years and the price was coming down and down and down, and finally at a level we thought we were comfortable buying. So we bought it with a view that business plan A is to change the use from office to PBSA. Hard in Bristol. Location-wise, it's good, but it's not normally where you see PBSA, but there is an campus in Bristol. But our plan B, which is a strong plan B, was we just do an office refurb in city centre of Bristol. So it gave us that optionality of if A goes wrong, we can have B, and if B goes wrong, we've got C.
Presumably the Bristol office market, I don't track it that carefully, it's got pretty tight supply of that sort of class A plus, BREEAM, super duper rated.
So there's not that much coming forward. It's huge demand there still. It's a huge, more demand than anywhere else really in the country for that sort of stock, and big footplates, not your 1,000, 2,000 square foot units like you see in other cities. So we were just really comfortable with it that if plan A doesn't work, we've got another. That's how we look at it.
You've got another option. And then from a financing perspective, obviously you've got your money and Alchemy's money from an equity perspective. Obviously with a large proportion of our audience will come from the specialist finance market. How do you go about financing getting the senior financing for a lot of your assets?
So pre-interest rates going mad, we were like 55, 60% LTV, supercharge our equities return. Now the past 3 acquisitions have all been equity, no senior debt, with a view to, if we need to and when we want to, they're there unencumbered and we can raise debt against them. Yeah,
okay. And would you go out and originate the debt yourselves, or would you work with a specialist finance broker to help you do that?
We do both. We've got direct relationships with banks and lenders. We also use brokers as well to start on some projects to go out and source it.
Yeah,
because we don't know. And there's always new lenders coming into the market as well.
That's right, yeah. But I think the assets and the business plans that you're working on are quite esoteric, and so as a consequence of that, understanding you don't know the entirety of the market, right? So you don't know who likes what and who doesn't like what, and also much like fund managers, lenders' appetites change quite quickly. And
our stuff isn't the easiest stuff to lend on either. There's a lot of risk.
A lot of risk
to be taken.
Short-term income. Yeah. So and then otherwise you're talking to the bridging market, aren't you? So and these could be large bridges as well.
Yeah.
So in Bristol, what was the purchase price, and where do you see the sort of GDV going in your business plan?
We paid 14 and a half for it. As an office redevelopment play, that building would be like, if Cate refurb done, new facade, probably 45 to 50 quid a foot in a couple of years' time. The issue we've got is what's that going to trade for? Who's going to buy it?
Yield-wise, you mean? Yeah.
Yield-wise. On a PBSA scheme, I actually need to look at the numbers, I can't remember, but more than 40.
Yeah. Yeah.
I think we're going from 400 beds or something.
Yeah. In terms of the, going forward, do you think that, the investment market has obviously been subdued, and it's predominantly people like us that are acquiring these kind of assets, obviously, people with our sorts of appetite that are acquiring the assets. At some point, people like us also need to exit these deals. Are we reliant on interest rates coming down and money coming back into the institutional space?
So it's a conversation we have in our office a lot. Yeah. I think, I don't know, but my personal opinion is I think funds will have to come in again and buy, but they'll only buy the best of the best. I think they will have to reallocate some cash into office, I think. And I think overseas high net worths still have an appetite for that stock, but not a keener yield as a fund. But I my gut feel is they'll be back in a couple of years.
Yeah. Do you think that the days of the sort of 4.5%, 5% net initial yield, they're over, right?
Unless you're in a prime office building
in
Mayfair. Yeah, I don't think they're coming back.
Or it's a Bond Street, it's a Bond Street retail.
Yeah, I wouldn't feel comfortable underwriting a deal anything sub 5, probably sub 6.
Sub 6, yeah. I mean, to my mind, anytime I underwrite an office investment or any office that I buy, when I look at the downside case, I'll never exit on less than a 7.5 or 8% yield. This is even pre-interest rates going up.
Yeah.
Cool. And in terms of just maybe taking a slightly different angle, you've obviously been supported by some interesting people along the way. Are there any particular obviously your wife's father, for example, and Mark Smith, any other significant mentors that that is probably worth giving some acknowledgement to?
I think when I set up Try 7 I kind of made a conscious decision to try and surround myself with guys who've been there, seen it, done it, and experience. So obviously Nigel Henry and Warren Rosenberg at Fusion, they've been incredible role models for myself and Dan, and always there to kind of bounce ideas off. Our head of asset management, Stuart Goldstein, who's been there, done it, seen it all, 35, 40 years in the industry, was an agent and then ran a Goldman Sachs portfolio. And just those three guys really help us kind of bounce ideas and just give us like the grey hair we don't have.
Yeah.
And I think as a business, one of our good qualities is we always say, well, if we don't know, let's ask. Well, let's go find the answer.
Yeah.
And those are the guys who really help us.
Yeah. And, in terms of things that you would say to our audience, there's a huge number of budding property developers, entrepreneurs, that are part of the audience network.
Yeah.
Having spoken about the journey that you've been on over the past 10, 11, 12 years, what advice would you give to people who are wanting to kind of get into the position you're in now?
So listen to those around you, those who know more than you. Try and surround yourself with people who you can learn from, and don't be afraid to make mistakes.
Yeah.
You're going to make mistakes. As long as you learn from those mistakes, it sounds cliche, but it's true. You make mistakes all the time. Don't be afraid to make them, and just make sure you learn from them. Because we've made loads. You probably still do every day.
What's your, you've obviously adapted from oil trading to trading, fairly simple, mainly residential and mixed use properties, to then learning about the intricacies of PBSA development and the planning system and offices and all the rest and everything that comes with that.
Yeah.
What do you think the secret has been to being able to adapt and learn these different sectors?
So it was kind of the advice I gave, but as a person, I can get super focused on something. And if I'm doing something, I want to know everything about it. And I won't stop till I've learned as much as I can learn on a particular topic. And I'm also never scared of saying, you know what, I don't know. Someone who does know, please tell me. Or, someone's better at me doing something, so get them to do it instead of myself. So that's kind of always what I've done. And that's how I learn, just learning, watching, making mistakes.
But as someone who might be doing these resi flips, and that might be looking at the commercial sector as a place that they want to go into it. What are the major risks and dangers? What are the pitfalls that people need to avoid when they transition from residential to commercial investments?
Make sure you know what you're doing. So I remember the first office building we bought, I didn't know what an empty rate was. I hadn't had that cash flow modelled. I didn't know what it was. So it's just try and learn as much as you can about it.
Yeah.
When I was modelling, when I did my first office deal, I didn't know that you'd have to give rent freeze. Like really naive stuff. And now I look back at one, why did my investors back us? And two, I didn't know a lot, but you learn quickly.
Yeah. I think, I was lucky that within my career, I had after I did a year in retail warehousing, not just retail warehousing, it was retail warehousing rent review.
Yeah.
So try to make an asset as unattractive as possible, and then do the most boring job you could possibly do doing it. I then had the fortune. I was fortunate enough to come into office agency space, office leasing. Yeah. So I got a bit of a grounding in that, and then moved into investment agency in the West End. So at least I had the benefit of that experience. But
it's very interesting to say that. I think if I had my time again, and I was going back to the 18-year-old me who didn't really want to go to uni, and I was giving someone else that advice, I'd say go be an agent.
I think that's good advice.
I think that's what I think. It took me a lot longer to learn things and grasp things, not having that agency experience.
Yeah, I agree with you up to a point, which is that I think that if you want to be a successful investor and developer, you want to have a bit of a background in agency, because you do. There's a lot that you learn, but I think that there is but then at the same time, within agency, when I moved from agency to the investment side, on the client side, yeah, and working in a private equity fund as well to boot, you then look at all the things that you thought that were your everything as an agent, and they were that, and then that compared to that as actually on the client side. And so I agree with you that agency is a really good grounding, yeah, really good foundation. But I think ultimately you need to move to client side after a few years.
Yeah,
that would be my that would be my read of it. I mean, it's a common question I ask most of my guests about what advice you'd give your younger self. Obviously, you talked about maybe going in an agency, but like, if you were to talk to yourself when you just left Birmingham, you've been, you kind of got to that point where you didn't want to be this sort of burnt out 40-year-old in a oil trading business, or energy trading business. If you were to give yourself some advice then, knowing what you know now, what would you say?
That's a super question. Don't worry, it'll be okay. Now, I would say collaboration is very important. I've learned that it's better to do things with partners and like-minded people than try and do it on your own. That's how I started. I think I'd say you've got to work hard and harder than everyone else to succeed. And you've really got to back yourself, especially if you want to go do have your own business. You've got to back yourself. You've got to back your ability and just trust and go. I think that's, if you want to be an entrepreneur or you want to own your own business, you've got to trust in your ability.
Well, I think it's pretty obvious that you definitely have that self-confidence and willingness to back yourself.
Some call it stupidity. But
listen, I think there's so many people there'll be so many people who are in employed roles who possibly who probably never leave employed roles, but will still have that sense that they want to do something and want more, want to be their own boss, be the master of their own destiny. But there'll always be that thing that holds them back. And so, whilst you can call it stupidity, I don't, because we've obviously forged similar-ish paths. I think it's bravery. You've got to be really brave.
You've got to have that self-confidence that that thing that you can't touch. Just go and do it. Try it.
But now,
don't be scared to fail as well.
Well, 100%. But now, if someone was to turn around to you and say, "Right, we're going to wind up try 7, and you're going to have to go and get a job," you would
struggle.
You're probably. I mean, I say you're like me. You're probably unemployable now.
Yeah. Let's just go start something else tomorrow. I don't know what that'd be, but I think once you you run your own business, it's very hard to go back.
Very hard to go back. And I think that's why I'd say that there are, particularly in the finance brokerage community, obviously, which is a big part of our audience. There's as soon as people go self-employed, they're like, why was I ever not self-employed? But you have to make that jump.
Yeah. But you've got to be employed because you've got to start somewhere, unless you're some mad 18-year-old, or you've got to learn. I've said it a few times. You've got to learn. It's the most important thing. You've got to have your ears open.
I also think about the agency side as well. One of my top agent. I keep saying to him that you need to come He said to me, when are you having on the podcast? I said, when you become a self-employed entrepreneur. I keep saying to him, you need to do it. You need to do it because he's in a big firm, but he's mid-30s. It's time.
Yeah.
It's time.
No, we're looking to bring potentially someone else into the business, and it's a big decision, especially the older you get. You've got family, you've got mortgages, you've got rent, whatever you've got. It's not easy to do it when you're 20. When I did it when I was 26, 25. Then when you've actually got mouths to feed it, it's a harder decision to make.
Well, some people might think I'm completely insane. When we set up Avonmore when I had 3 kids. My youngest was only 6 months old.
Yeah,
so,
but that's just your character, isn't it? You back yourself.
You back yourself. You back yourself. Someone would say that if you sometimes you put yourself in a position where you've got no other option as well. So, I think that also helps. I think if we talk about lifestyles and overheads, right? So if you've got a big mortgage, if you've got the expensive lease payment on your Range Rover or Range Rover Sport or your BMW 3 Series or whatever, and you got school fees, you're going to have fewer options.
Yeah.
You'll be like, shit, how am I going to pay for all this stuff? And of course, then you're never going to make the big jump. So
100%.
You're in a beneficial position. Just talking about lifestyle questions. So what does a typical day look like for you?
Early start, having 3 young kids at home. We're not one peaceful night's sleep. There's always one waking me up in the middle of the night. So I'm up. I try and, this is also the benefit of being self-employed, being your own boss. Try and take at least one of them to school.
Nice.
Jump on the tube, overground, from where I am in northwest London up to our office in Wigmore Street. It sounds really cliche, but we have fun all day.
Yeah.
Like our office, so we share an office with Fusion. There's 8 of us, 9 of us in there. We just have fun. It doesn't feel like we go to work hard, but we don't find it work.
Yeah.
And home. Try and get home for kids' bath time again. Friends who work, employed, struggle with that. So very lucky with the work-life balance. Being your own boss gives. Dinner, football on TV, bed.
Yeah. Who's the football team?
Spurs, unfortunately.
Yeah, well, I had a feeling it was going to be a choice of 2.
Yes, so a life of misery. Not so much now, but I used to travel home and away in Europe with them, but with the kids it's quite hard. So saved me some heartbreak.
Even your children are even more of a blessing.
Yes.
And have you inflicted the curse of Spurs on the children as well?
So my eldest is 4, so she's just started to kind of understand it, and her Chelsea and Arsenal mates, they're all taking it. But no, she's and my son's 2. He's just started playing.
Yeah, he started playing. Yeah,
I'd say play. Yeah. Moving cones, but
And you still play a bit 5-a-side yourself?
Yeah, I do 5-a-side on Monday evening with mid-30-year-olds who think they're still 20. So, a lot of arguments, a lot of slide tackles, a lot of elbows arguing, but we all love each other.
The injuries, any injury? The injury's starting to creep up now.
I remember being a kid and being able to play like 90 minutes after 90 minutes every day. It takes me like 3 days to recover from 60 minutes of like walking football. It's horrendous. But no, it's good fun.
Yeah, I have a few friends who still play football in their mid-40s, and I used to be reasonably good at it, but I picked up an ACL injury in my early 20s, and that was me done. And I try to avoid it now because I know that if I could play once, I'd play brilliantly, and then that'd be me done for 6 months. Yeah, that will happen. Don't do it. I played a lot of rugby as a kid, and the niggles I get now are just horrendous. It's almost not worth it, but I need that competitive kind of
Monday night, 7:30 to 8:30.
So you haven't fallen into the golf trap then?
I have. I have, unfortunately, and my partner Daniel was obsessed with it, so I was ready to give it up last year, but I got back into it this summer.
We'll have to convert you into tennis. It may be
I'm
more
into
your
paddle.
speed.
I like paddle.
Paddle, yeah, that's becoming quite a big thing.
Taking over, so yeah, I like paddle. Prefer paddle to tennis.
Well, yeah. Do you see a property investment opportunity in some paddle courts?
So, we actually, the family invested years ago in the first few in the UK, like 12 years ago.
Well, okay.
Didn't go too well, and then a few people have been saying to me, "Can you find us a plot somewhere in North London to build paddle courts, because it's taking off." So it definitely is. But I've got too much going on to find a paddle.
Small potatoes. Yeah. As someone who is in the business of investing in tennis at the moment said to me, he said, it's not particularly value. It doesn't generate particularally strong return per square foot.
No, I think it's a lifestyle kind of. If you love it and you've got a bit of cash, why not?
Yeah.
I don't think it's not something I'll be looking into.
Not a business thing.
No.
And then, in addition to the football and the kids, you mentioned to me off air that you're into cold plunges. So probably you're officially middle aged now.
I'm middle aged. I get influenced by Instagram, but no, I do love it. To be fair, I used to do it back when I was playing rugby. I always loved it then, and I don't know the science behind it, but I just quite enjoy jumping in a nice cold bath every morning. Is that
the first thing you do in the morning?
Yeah, I try. I say every morning. I try and do it most mornings. But no, I actually just enjoy it. I feel like it wakes me up and energises me. I'm not religious with it. I don't do 3 minutes and 2 minutes. I just jump in, stay in there for as long as possible and come out. But I do love it. I think it feels great. And
then to complete the cliche, you were saying that you don't do breakfast. You're an intermittent faster.
I'm not an intermittent faster. You put words in my mouth. You know what? By the time I've got all the kids out, I'm on the train. It's normally 11 o'clock anyway. So it's like, what's the point?
Yeah.
So yeah, I the occasional banana I'll have.
Okay.
Yeah, that's about it.
Yes, the sort of the Greek breakfast of the coffee and a cigarette.
But I'm by no means a cereal dieter for sure.
No.
Those who know me know I'm not into that.
Have you we've had a few guests come on over the last few months and who've decided to give up alcohol. Have you fallen into that camp, or you still enjoy a drink or two every now and again?
No, I still enjoy a drink. Yeah, I definitely aren't not teetotal. I enjoy a drink, controlled, obviously.
Yeah,
but yeah, I think alcohol's not good for you, for sure. But it's enjoyable to have a drink and converse and whatever. It's just a pastime. But not to excess, but yes, I'm not teetotal.
Do you think that the growing trend of younger people not drinking, something like a quarter of all under 25s now don't drink or never drunk? Do you think that's going to change sort of networking and relationships?
I've never heard that stat. Yeah, 100%. Because our generation, it's all about Thursday night. Do we go grab a beer?
Yeah.
And you go to any pub in Marylebone on a Thursday night.
It's heaving. Yeah.
It's heaving with the gilets and whatever. So massively changed. Yeah. 95% of the networking I get invited to, we do as a business, revolves around some sort of drinking.
Yeah.
Which is probably the bad thing. So I don't think it's a bad change, but have a huge effect.
Yeah. I think it might be boring. I think it might be sort of high rocks high rocks events and stuff like that.
I went to the first property investment paddle society, which was on a Friday afternoon. That would have used to been just go to the pub.
Just go to the pub, yeah.
So,
and not only go to the pub, but we were actively told there. Back in the day, there was. I think just at the beginning of my career, it was almost if you were an agency and you weren't down the pub on a Friday afternoon,
you think something wrong.
You weren't doing your job properly.
100%. The stat you gave, that's going to change, and it's probably for the better.
Yeah, I guess. I mean, we're certainly going to have healthier people coming into the industry.
Maybe not as fun.
The chat might be a bit different, but it's certainly, I met someone who's quite involved in the Royal Holloway University, and they're having to shut a couple of the student bars down because there's just not the demand from the students.
Yeah.
So maybe something also that you'll probably need to think about for some of your developments as well going forward. All right. Well, I mean, I think on that bombshell, it's been great, great meeting you and great having a chat.
Thanks for having me. It's great. Thank you. Sorry for my cough.
Oh no. I think it's more than okay. If anyone wants to reach out to you, get in touch. Someone wants to come and talk to you about funding, or whether someone wants to talk agency, whatever.
We're an open house. Always come in. We're in Marylebone.
What's the best way to get hold of you?
I'm not going to get my mobile number on here.
Probably not a good idea.
If you have a look on our website, try7.co.uk, all our details are on there. Give myself, Dan, Paul, happy to meet and have a chat.
No, brilliant. And it's been good having you on. Maybe we'll have you back in a year or two and catch up and see how things are going. How maybe your next funding round goes. Otherwise, thank you to our audience, to our listeners and viewers, whether you're on Spotify, Apple, YouTube. I think we've been consumed across nearly 50 countries now. So if you want to get in touch with Sam, please do. I've been Michael Dean. I'm at property_funder on the internet, as I said. And if you want to reach out to me, that'd be great. One final thing is I just wanted to dedicate this episode to a chap called Toby. Toby sadly passed away at the weekend. He was my son's friend's dad. He was only a few years older than me, and he lost his fight with cancer. So just wanted to give a shout to Toby and his family, and we're all thinking of him and his family, and look forward to raising some money in a few months to combat cancer. So on that note, thanks everyone for watching and listening, and we'll talk to you again soon.